Now the gold market is booming. The treasured commodity has now crossed the $2,000 mark an ounce. Amidst new COVID-19 realities, countries in West Africa like Nigeria and Ghana are looking to gold as a store of value and, of course, an economic booster. For more on the global commodities market, Damilola Akinbami is the head of research at Financial Derivatives. She joins me now from Lagos to have this conversation. Dami, a pleasure to have you join us for this conversation on Closing Bell, West Africa. Now, definitely at $2,000 an ounce. Gold is more than ever before validating conversations across countries about it being about its renewed place as a store of value. But how worthy do you think gold is within the commodity space generally as a measure of support for economies?
Gold is a precious metal that has this safe haven appeal. So when in terms of uncertainty, you see investors run to that asset class. And that's why we're seeing the price of gold set a new record high of over $2,000 an ounce. And what is driving this is the heightened uncertainty. We're seeing rising coronavirus cases across the globe. We're seeing the dollar weaken against several currencies due to increased stimulus and monetary policy easing. Also, there are a lot of geopolitical tensions, the US-China trade wars, the blast that occurred in Beirut, Lebanon. So these factors are contributing or driving the negative sentiment, which is pushing the price of gold higher. And we're also seeing other precious metals such as silver increase in price. Year to date, silver and gold prices have increased by over 30%. And the importance of gold right now is because it also forms part of the foreign reserves of countries. So for instance, countries such as Nigeria would have their foreign reserves in the dollar, in other currencies such as the yuan, in special drawing rights, and also in other assets such as gold. So for countries that have gold as part of their foreign reserves, they can depend on it to boost their external reserves and also to support their currency in times of other commodity price shocks.
Dami, intriguing that you ended by saying that countries that have gold can actually begin to look to gold now. Now, if you look at the rate at which we have been hearing economies across the globe talk about gold, when we come back to Africa here, Nigeria, Ghana, you see that they are more than ever pressured, like you rightly mentioned earlier, to look into the gold space. But when you now begin to assess their readiness to explore that option of boosting the economy, are they ready?
Well, there are some African countries that are ready. So, for instance, Ghana, South Africa, they are. Although a major challenge is still the power supply. So, for instance, South Africa has been facing a lot of power shortages, which has contributed to the economic crisis it found itself in even prior to the COVID pandemic. So definitely, like I mentioned, so that country is facing that. But again, due to the level of sophistication in Ghana and South Africa and the level of gold reserves that they have, they, to an extent, obviously would benefit from this boost or increase in the price of gold. I know Ghana, for instance, it's a diversified economy. So Ghana has reserves, Ghana has gold, Ghana has cocoa. So its economic base is well diversified. But for a country like Nigeria, that just has gold reserves of about 200 million ounces, and basically that industry is still very subsistent and yet to be fully diversified. So Nigeria, for instance, doesn't yet have the capacity and the ability to benefit from the increase in prices. But the government has been putting in a lot of measures. We are aware of the Presidential Artisanal Gold Mining Development Initiative, which was launched last year, basically to try and create a supply chain between the artisanal miners and the central bank, and also basically creating like a gold buying center just so as to regulate that industry. So Nigeria can start putting in place several methods, several techniques to develop its gold industry. So the power issue has to be addressed because you know that the epileptic supply of power is still a major issue in Nigeria. Insecurity in most of the gold producing states, for instance, especially in the north, that is still a major issue. And smuggling is another issue that the Nigerian government is facing. And that's why the initiative was created basically to stop the illegal sale of gold rather. For instance, Nigeria loses about 8 tons of gold every year to countries such as Dubai because of the porous nature of the borders. So for Nigeria, a lot still needs to be done, but I think they're on the right track because at least they have identified gold as another resource that the government and even the central bank can depend on to boost foreign reserves and also to even boost revenue sources because the government stands to benefit from royalties and taxes from the sale of gold.
Now, Dami, as countries across Africa, especially begin to have more conversations about leaning on the commodities industry to serve as buffer for their economies, with cocoa now on the soft side being the life of the party, so to speak. How much support do you reckon soft commodities can begin to offer for economies across Africa at this time?
Soft commodities such as cocoa, unfortunately, are also being affected by the coronavirus pandemic, which has led to weak demand. So, for instance, the price of cocoa has dropped significantly and is trading around $2,000 per metric ton. So, for instance, Ghana and Ivory Coast, the cocoa board, which initially planned to increase the price premium for farmers to about $400 a ton, may find it difficult to actually implement that premium because of weak demand. And so we're seeing a lot of chocolate making companies also been affected because due to the low demand, due to panic buying, due to the shift to essential services, you're seeing a reduction in the demand for luxury items such as chocolate. So right now, soft commodities like cocoa are being affected, and countries that have or that depend on cocoa, so for instance, Ghana, Nigeria, Ivory Coast, Cameroon, may be experiencing a decline or would experience a decline in their cocoa export revenue. So, but again, that just places emphasis on the need for having a wider or a broader revenue base so that even if soft commodities such as cocoa, even if all prices are declining, you have other resources, other options to depend on, such as gold.
Tammy, talking about other options to be dependent on, especially seeing that you mentioned gold again. I was just trying to draw up a comparison earlier based on what you said, seeing that cocoa, according to you, is selling for as much as $2,000 per metric ton. When you compare that to gold, just going up to $2,000 an ounce, you begin to wonder how can African economies get value from their soft commodities? How can they begin to get more value?
Yes. Yes. So how can they get more value for their soft commodities? So again, right now, for instance, Ghana, the government is thinking of how to bridge that gap just to ensure that the farmers are still able to generate some level of income from their from the sale of cocoa. And right now for gold, so because the price of gold is increasing, and again, that value is likely to continue because as long as there's uncertainty, the price of gold is going to continue to increase. So definitely you're going to see governments, you're going to see companies trying to hedge their options basically to benefit from both worlds. So for soft commodities, definitely it's short term. If there's no resurgence in the COVID infection cases, you're going to see these commodities start to pick up. And as long as there's a recovery, you see more companies, more economies reopening for business, that demand is going to pick up. Because the major issue right now that is affecting the soft commodities is the weak demand. Usually in the past, it's always a supply chain problem. So maybe there's increased supply or lower supply. But right now, the supply isn't the issue. It's the weak demand that is the problem. But if the recovery commences as anticipated, maybe, for instance, maybe in Q1 2021, you're going to see a gradual pickup in the demand for these soft commodities. And as long as the demand begins to pick up and increase, that would impact positively on prices, and you would see an increase in revenue from soft commodities. And then also, you also have likes of other assets such as gold, such as silver, and other mineral resources.